You have created one of the coolest programs for aspiring VCs, which got them placements into VC firms. And now is a visiting analyst at Eurazeo. Welcome to the podcast, man.
Thank you. That was really kind words about Tiny Ventures. Thanks for having me on. And yeah, this is the first podcast I've actually ever done, so it's really cool to be here.
Awesome. Well, looking back, when you're just connecting dots, what has made you become the VC you are today?
Yeah, I think one of the most important things about being a VC is being curious, and I've always just been a kind of a curious person. I think I don't know why that is, but yeah, I think being curious has probably made me be quite a good being humble about it because I'm only a visiting analyst, and yeah, I think that's got me quite far because yeah, when you're doing like a case study in an interview or when you're out at an event trying to talk to people and meet really cool founders, I think it really helps to be super curious because everybody you meet has something interesting to say. And if you approach networking events like that, then it just makes it a lot more enjoyable and you tend to make more genuine connections and stuff. So I think being curious is probably one of the things that's made me the sort of VC I am today.
Yeah, and how about your journey? Like maybe even all the way back to your childhood. What are the roles that you have been in, and then you broke into VC, and then
hmm
to right now?
hmm Yeah, so like going back to the beginning, I guess when I was in high school, I realized I was really interested in economics. Probably because my economics teacher was just really good. She was one of the most engaged of all of my teachers at that crazy high school. And then eventually I made it to university doing philosophy, politics, and economics. But when I arrived at university, I already knew that I wanted to go into finance. I just didn't know where. And so I set off doing sort of lots of little programs that teach you about different areas of finance. Had a lot of help from a really cool charity in the UK called SEO London. That's like a social mobility charity that helps people from sort of underrepresented backgrounds get into finance. They taught me a lot about different areas of finance too, as well as I did this program with a company called Amplify, and realized I didn't want to do sales and trading. And so then I bid more towards investment banking on the sell side, did an internship at a pension fund, realized that probably the buy side was what I imagined finance more would be. And then I did another internship at an investment bank, realized I don't want to do banking. And then I did a final internship at a VC firm and just completely fell in love with it. It was like, yeah, it was just immediately I knew this was exactly the area of the buy side that I want to spend my time in. And then I had a master opportunity to do a master's degree, but I kind of didn't really want to do it because it was super expensive and I didn't really feel like it would help me that much. I felt that it would only really help me do banking. And then banking, the only reason I wanted to do that was to do VC. So I kind of thought, well, maybe I could just jump the queue and not do the masters and just break straight into VC and see if that's possible. So I deferred the masters for a year and then just went crazy applying to everywhere I could, and just at the last minute, I managed to get the role that I'm doing now and avoid doing the masters, which was quite good. So that's kind of the journey to today, really.
Yeah, and it seems like you really found what you can cross out and what you can, just let stay. And you kind of just found that because you were interested in finance, which is literally everyone. And I can bet you all these like audience as aspiring VCs, most of them might not even know if they want to do VC, but it sounds interesting to them.
hmm
So talk more about, you already said VC is for people who are curious. So who is VC not for?
Well, probably what I can say with most certainty is it's definitely not for people who don't want to do VC. Like, which sounds a stupid thing to say, but I've actually met a lot of people who are doing these roles who really don't care that much about it. So if you don't do it for the sort of prestige or the kind of because you think it's cool, or don't if that's the reason you're thinking about, to be honest, if that's the reason you're thinking about doing anything, it's probably not that good. Because if you want to do something because it looks cool, 99% of the job with most things, even if you're a pop star, like a lot of it's not about it. A lot of your day is not going to be the looking cool part. Like in VC, a lot of people might think it's super glamorous and you get to hang out with lots of cool people, but at the end of the day, you're only going to be able to do that kind of stuff if you're really good at it. And the only way you're going to get really good at it is by doing lots of cohort analysis, or like doing lots of sourcing, or going to lots of events where people don't necessarily want, well, not, they don't want to talk to you, but they're not thrilled to talk to you. If when you're a junior VC, you'll speak to a lot of people, and it's not going to be there, I want your autograph and want to be your best friend. Like, you're going to have to come up with a reason these people should talk to you in order to get maybe a place on a really cool deal. So it'll be a lot of hard work. That's one thing. If you just want to do something because it looks cool, that's probably not a good idea. And then I don't know. I actually listened to the previous podcast you did, and you asked a similar question, and I was thinking about what I would say. I don't know. I don't know whether there's anyone in particular that's like, oh, I think most people can do a lot of things, to be honest. If they really put their minds to it, they can really do most things. Other than people who don't want to, who are just doing it for the clout, I guess. I don't know. Yeah, I mean, I think this previous guest said if you're kind of introverted, it's a bit difficult. That's probably true. And there's a lot of things that'll make it more challenging, I guess. Like if you're introverted, if you don't like numbers so much, if you don't like tech so much, if you are really passionate about something else like gardening or something, and you're going to be thinking about gardening all the time whilst you're doing the role, like that's probably not good. Those kind of things. Or what else can I say? Like, yeah, basically, if you don't like numbers and you don't really like people, then a lot of VC is mixing those two things. Like, it's a lot of networking, and it's a lot of like going through the cohort analysis and trying to figure out if the product is something that people want. And so if you don't like really delving into the numbers a lot, or reading a lot, and really thinking and like learning about technology a lot, but I guess that's the other thing. If you don't like reading and trying to understand really complex things, then they're probably quite annoying, because you have to spend a lot of time trying to figure out what a business does in a short amount of time. But I don't know. I mean, having interviewed a few people now, do you feel like there's any, I don't know, any kind of type of person that is not well suited?
Yeah, I'll say it's really interesting that you asked this question because from all the VCs that I've interviewed,
Mm,
there are common personality traits where it's like they're really outgoing, right? They're,
mm,
open to even hopping onto podcasts. So they're really outgoing. They can understand people really, really well, and they just never want to stop learning. So if you want to be kind of stable and just like, hey, I've learned all I can about, how to do these like investment banking methods. That's it. Then you're probably not suited for it. So you have to keep on being curious, just like you said. So I'm curious about one thing is that I know you mentioned the numbers. How much numbers do you actually need in within your VC work? And how fast can you learn those numbers?
yeah, I think the first thing to say is it's entirely dependent on the stage you're looking at. So if it's a pre-seed deal, you might not have any numbers. Then on the flip side, if it's a Series B deal, you'll have loads of numbers. And so it's a scale between those two endpoints. And I think when most people think about VC, what they're thinking about is Series A or seed investing. And at that stage, there's not tons of numbers, and it's not such that you'll have to build a model like you might do in PE, private equity, or investment banking. But it is such that you'll have enough numbers that you'll need to do some basic, what would you say, basic kind of analysis, in that you'll have to look at percentage growth, trends in the numbers, and most importantly, the story behind the numbers, I think, is really important. And so it's not, if you're not brilliant at maths, it doesn't really matter. It's just being able to be, what would you say, fluent with the numbers in such a way that you can understand the story behind what's changing them. And I guess there's also some accounting knowledge to know as well. Like, often, even at the seed stage, you'll have like a P&L with like the monthly revenues coming in and the costs and stuff. So there's a lot of looking at through those numbers to understand what's been going on, and translating those numbers into like a record of every month at the startup. So for example, say you've got a startup that's growing really quickly, you won't just have to understand that it's, sort of 150% month on month growth on the revenue. You'll then have to look behind that and look at the costs and say, okay, how are the costs growing, and what what are the the cost of goods sold comprised of, and break down the OpEx and see which line of the operational expenses are largest, and why they're largest, and whether there's a particular month where it spikes and why that's happening. You really have to, in that sense, be good with numbers, in that you can take a changing list of numbers and translate those changes into events or choices by the founders or evidence of product market fit. Like, you have to be able to tie those numbers to a story about the company.
It's really interesting how like now VC has just gone later and later and later stages where it's like A16Z recently raised like 15 billion, right? So they
Mm,
almost kind of operate like a PE firm. And obviously like VC is a category of PE, but they really do operate as a PE firm as well. So I'm curious on your thoughts. Do you think VCs, and have you seen like maybe like younger VCs who doesn't really have that numbers background? And by numbers background, I mean like maybe like a consultant, investment banker, or like a PE analyst. If they
yeah.
didn't have that background, could they still get into and join a later stage venture capital fund?
Yeah. Hmm. It's difficult. I've not, most people who, without the numbers background, do the seed stuff and the Series A stuff, like the traditional VC. When it comes to growth equity, sort of Series B, C, D, around that, not really much. I think much later than Series D or E, you're talking more about like, maybe that is growth, but you're talking at almost a different category at that point. But that growth equity kind of stage, I don't think as much, because I mean, I've not seen it. I've seen many people break into like VC, the traditional Series A stuff, without like a numbers background, such as McKinsey or one of the bulge bracket banks, but not so much growth equity. I think what you can do is you can break into a Series A fund and then go Series B, because it's not that big of a difference, and they can you can do like 80% of the job, and then the extra 20% that's a bit more numbers heavy, if you can illustrate that you're kind of super fluent with numbers anyway, then you can just learn it on the job. It's always easier to go from Series D downwards. But some people, I mean, my boss at Eurazeo, she went later stage. So she used to work at Local Globe, which is like an early stage fund, so pre-seed seed. And now at Eurazeo, she's looking after like a growth stage fund. So you can do it. It's just it takes longer, and it's, I think, from nothing, coming out of like a student background, it's difficult to just do that. But it is possible, and there are probably many growth funds that have like internships actually that will train you up. So yeah, I think it's possible.
Yeah, and I've noticed that as well of what you're saying, where I know there's like a guest who hopped on who was from Intuit VC, and her background was she was from Deloitte, but she was not from the number side
Mm,
of Deloitte. So she really had to just ramp up and get to that training herself. And
mm.
obviously, like Intuit is gonna train her for whatever processes that they need. So in your experience, like even when you were a visiting analyst or intern at the previous VC firms, how much training did you get and what were those training?
Yeah, not really much. They're not going to sit you down and tell you how to do it, to be honest. But you do. That said, despite the fact that they don't do that and sit you down and give you a lecture on it, you do still learn a lot just by doing it. They'll just ask you to do stuff, and it's just up to you to figure out how to do it. And thanks to ChatGPT and Gemini and the other lovely AI tools we have, you can pretty much, if you're a smart cookie, you can pretty much figure out, you know, how to do it. So yeah, it's not, they don't really sit you down and train you so much, but it's just by through different tasks that you learn to do things. And most of it's not rocket science. Most of it you can either figure out how to do yourself, or just ask ChatGPT for some metrics that show defensibility, or metrics that give some evidence of product market fit, or what does a good NRR look like. They can help you figure it out. So you don't really get trained so much, only through being in the office and asking questions. But that in itself is quite good training. So, and I guess it works.
And go more on this as in like go through like all of your specific past VC roles and then go like, hey, maybe even week 1, week 2, week 3, they kind of just like gave me these types of tasks, or this is how they kind of just like got me started?
Yeah. So the first role I had in VC was this European VC fund called Atomico. So that's a fund that basically the guy who founded Skype, he like exited it all and then had loads of money and wanted to give back to the European ecosystem. So he founded Atomico, and now it's like this big VC firm that's invested in some really cool companies in Europe. And so that's the first one I joined. My first kind of task was to help out with this ecosystem report that they do called the State of European Tech Report. So it's a big, probably many of your listeners are in the US. And so this report is for Europe. It's kind of a huge report that goes into the funding levels for each sector, the which companies are doing well, has a big survey of founders and investors and other ecosystem players to give some insights into what everyone in the ecosystem is thinking about certain issues. What else does it do? It has a bunch of chapters, uh, which I forget what some of the other ones are, but basically it tells you everything you'd want to know about the ecosystem. So in my role, I was responsible for the survey we ran, and then the certain chapters within the report. So I think I was responsible for the executive summary, the fundraising chapter, and then like maybe the overall funding levels chapter. And so what I'd have to do is I'd have to pull the data from our data providers such as Dealroom and PitchBook, and I'd have to basically sort that data into a chart and then add commentary to it to explain what it's doing. And so that sounds quite simple, but what you also have to think about is there are a million charts you could choose. Like there are a million things that you could choose to present. So what you choose to present becomes important in and of itself. So you're almost like a curator of, I don't know, like an art curator. And obviously it's not that serious, but it's like that. Like what you choose becomes important to the story itself. So that was the first few tasks I had. So making sure the data was all correct and nothing was misleading, and that the commentary was made sense and it told something interesting and everything fit together. And then after that, it was also managing the survey. And so that was sort of having this automated file that would take in the survey results every week. And it was the largest survey. I'm pretty sure it's the largest survey in all of Europe in European tech. So there's no other surveys in the sort of tech ecosystem in Europe that are larger. So it's sort of bringing in that data, splitting it out into different charts, splitting those charts by different types of people, what different types of people think about different types of things. And again, just telling an interesting story with the data. And that went on from sort of September to November, and then the report comes out in November, and they go and present it at Slush. I don't know if many people in the US know about Slush, but it's a really cool tech conference. And when I say conference, it makes it sound really boring. You know, people think conference and they think, oh, that's like maybe a bunch of people in suits, like talking about nonsense and the weather and sort of boring stuff. But it's really a big party. Slush is nothing like that. So if you don't know about it, definitely recommend looking it up. It's actually student run as well, so it's all got all the right vibes, and it's just really fun. And so that's where they go on stage at Slush and present it, and that's really cool. And then after the State of European Tech report was finished, we then have this like huge body of work that's great for LP management as well, because LPs see us as like having the best intelligence of all of the different VC firms. So it's a bit of a a bit of a strategic piece, to be honest. And then it's also a great marketing piece for the sort of 2 months after the report goes out. There's a lot of work that goes into. We do like country specific deep dives, or we do deep dives specific on sectors. We basically start splitting the report up into different cuts that people can digest for different reasons, and then also turning it into sort of lovely presentations for people who might be interested in investing in Atomico, and using that as like a real selling point for why we're the venture fund to back, and not other people. And then after that, so I was there for 9 months. After that, it was a lot of pipeline analysis, so going through the pipeline and seeing like, are we missing any cool deals? Are we too exposed on any sectors? How are we doing for the kind of founders we're backing, as well as doing various due diligence points for the investment team. So they might want to know how consumers are really feeling about a certain problem, and rather than just taking the founder's word for it, we might run a survey to analyze how people really feel about a product, whether they really have this is a really genuine problem for them, or if it's just a nice to have. Or we might do like a market sizing. So we might take a product and do a top down market sizing and a bottom up market sizing. And we could talk about what those two things mean. Maybe it's helpful for your listeners. And then other than that, other sort of data related things, like if the fundraising team needed some nice charts, we'd whip those up for them. So that kind of thing, really. And then after that, I worked at an angel syndicate, and then after that, I worked here at Eurazeo. So I'll skip over the middle bit because I don't want to be lecturing everyone for hours and hours and hours. But the
No, no, no.
Eurazeo
Go
bit
ahead. Go
now.
ahead. Like I want to hear about it because this
Okay,
is
okay.
an
Well,
important part where people's like, what the hell do I even do in this company or this VC?
okay. I'll talk about the angel syndicate a little bit then. So maybe people don't know, an angel syndicate is some guy who gets all these angel investors together and he presents them a bunch of deals, and then he's basically putting a menu together for angel investors to pick from, rather than they go out to the sort of street market and there's like a million different choices. They just sit down, someone brings them a menu with only like 12 items on the menu, and they know they're going to be all right, and they pick one of them. And so that's what kind of what an angel syndicate is, but for startups. So that this guy will pick out, well, it doesn't have to be this person or whatever. Might not even be an individual. It might be like sort of a team of people. They'll go out and find cool startups and present them all to these investors nice and easily, already curated with all the investment materials ready to go. And it's usually like they're usually pre-seed or maybe seed companies because that tends to be where the angels get involved. And so I worked there for a bit, and that was really cool because it gave me a lot of responsibility in that I was looking after a team of four other people, all scouting, and we were looking for cool pre-seed, seed stage companies in the UK to present to our angel investors. And so we'd sort of split up different deal flow sources between us to monitor. So someone would take care of like one batch of newsletters, someone would take care of a different batch of newsletters and make sure that we're like on top of all of the deals that are coming through those. Someone would be on top of a different platform. So there's a platform called OpenVC. I don't know where it's based, so it might be people might know about it in the US. Those would provide some deals for us. We basically like divide up all of the outbound that we could come up with, and then we didn't get that much inbound, to be honest. And if we did, they usually weren't brilliant. No offense to those guys. And then we'd also try and go to as many events as we could. So there's lots of events in London for like either angel syndicates presenting their companies that they've come up with, or pitch events, or all this kind of stuff. So and then it was my job also to monitor all of that team's work and turn it into a dashboard that every week we could see, okay, how many deals did we see, how many did we like, how many did we do a first call with, how many, like, have a whole pipeline. And that was that role, which was quite good because there's another element to it as well of doing the founder calls with the founders, screening the companies, sourcing them in the first place, recommending them to the next stage, and going through the numbers and stuff. So there was that element to it as well. And then so I was doing that for like 6 months or something like that. Maybe, yeah, 7 months maybe. And then I was also at the same time helping out at a incubator, so it was called Scalar Labs. And so I was like helping run events there, helping founders with pitch deck reviews, basically helping out wherever I could. And then I was doing those things all at the same time. And then after that, I also volunteered at Slush again. And then after that, I got this job at Eurazeo. And so whilst I've been here, I've been looking at insurtech businesses, the sort of Series B point, and that's involved a lot of, again, sourcing, a lot of due diligence and screening, as well as some miscellaneous tasks. I think just coincidentally, I've ended up getting a bit of a data spike, I guess. And so I've done lots of like deep dives and like data looks at certain things, like how insurtech's doing and how insurtech's doing in certain geographies and that kind of thing. So there's been that element to it as well. I think that's kind of a huge summary of all the things I've done. So it was a bit of a long story, but there we go.
Yeah, and this is simply amazing, right? Because that is what the process would actually look like. And Samuel literally just like gave you that entire overview of if you were selected, that's exactly what you would do. So also talk a little bit more on like I know you mentioned like the obviously like the Angel Syndicate, that's pre-seed, seed, and then right now is Series B. But then for the other two companies, what series was it? And then talk a little bit more on like big VC firms versus small VC firms versus middle AUM VC firms. And what's the difference?
Yeah, so the first place I worked at, Atomico, they do seed, Series A, and I think sometimes Series B. I don't think they do Series C. So they have the way they work is their investment team is divided into like early stage and growth. So maybe they do Series C. I don't know. They definitely do Series A and seed and B and potentially Series C. So that's what they do. And yeah. So yes, that was Atomico. That was number one. Number two, the Angel Syndicate pre-seed and seed. And then number three, Eurazeo, and that wraps up all the roles I've done, is B and C really, and sometimes I think B and C. I don't really think D. We never looked at D. And then sometimes some like some weird bits in between as well. Like sometimes we look at some weird deals. But that's just because of the structure of the fund, which is a more complicated story. And then in terms of differences between the big and small AUM VC funds, I don't know whether people have talked about it on the podcast before, but basically, when it comes to startups, it's and startup returns, there's this thing called the power law distribution, where basically, like most of the startups, not that they don't do bad, but most of the startups don't make much money, and then there's like tiny amount that make all the money, and it's kind of similar with VC too. Like the there's a very very small number of firms that are doing like all the hottest deals, right? So like Sequoia, Andreessen Horowitz, Index, and what are the other big ones out in there? You guys will know the big ones in the US. Like they do all the deals, like, and it's a real Pareto thing in that those small amount of people are doing all the stuff. And so when it comes to the differences in big AUM firms versus small AUM firms, like if you're working at like a tier one VC, it's really like I think what every VC should aspire to because that's where a lot of the action is happening. It's not necessarily all the action, but where a lot of the action is happening. And those firms tend to be bigger AUM firms. That's not to say that there are some really cool smaller AUM firms. There are, and that's it's more about whether they're the best in class. But the point is, regardless of AUM, I guess, like the tier ones at each stage are where you want to be, really. It's not a problem if you're not. It's just I think that's what people should aspire to because if you're a founder, you're always going to talk to Sequoia whenever you can. Because why wouldn't you? Like if you can get Sequoia on your cap table, but that's all the better for you, right? And their network is all the better for you. So just like great universities attract smart people because other smart people have been there, like you get this real like snowballing effect of because it's the place all other good founders go, the good founders want to be seen as a good founder in that kind. So working at one of those firms that's regarded as like the best at Series A, the best at Series B, or the best at seed and best at pre-seed is really cool because you get to meet the coolest people that are out there. So I think that's something that people should understand when they're trying to break into VC is like always keep those. Everyone should aspire to be a partner at Sequoia or something because then you'll see the coolest deals and you'll be able to be a board member on the coolest companies and all that good stuff. So it's really not. It's really some people might imagine that it's quite evenly distributed. Sorry, that some people might imagine that the companies that the coolest companies are evenly distributed across, or not even evenly distributed, but like almost linearly distributed across the different VC funds. In that, Sequoia might have 50% cooler deals than say a tier two, but it's not. It's like really exponentially sort of I don't know how you'd say it, but I think you get what I'm trying to say. Basically, is that like yeah, all the cool deals are really clustered at the top, and it's not like once you get sort of to the tier three funds, there's not much going on. I don't know. I mean, there is obviously. That's. It sounds like I'm throwing massive shade on like smaller funds, which I'm definitely not. Like, there's cool things going on all the time. It's just top tier funds do see all of the like cracked founders, if you want to call them that.
Yeah, and just like you said, there really is the aspect of like, okay, so how would the founder actually benefit the most, right? Is it, for example, is it the big name of A60 and Sequoia and the fact that, okay, they believe in this founder, which means that, okay, that means that the product probably works pretty well, right? Or even if it's not going to work pretty well, it's potentially going to work pretty well. So you can actually trust in that. Or, some smaller VC funds, they can compete and get lots of inbound if, and mostly only if, one, whether they had a really close relationship with the founder themselves. And, this is the hard part, but if they have that deal sourcing, awesome, cool for them. Or if they are like an industry niche expert, like if you're the biggest VC firm, or like even like a most go-to VC firm for ag tech, or the most go-to VC fund for industrial type of things, then bam, like all the founders will want to go to you. But it really, when it comes down to it, if you're just kind of like a generalist type of company, then yeah, like that name brand is gonna be insane, even if you work in a VC fund, right? So talk a little bit about the org structure. Like, what is the different org structure of small VC funds versus large VC funds?
Yeah, and then just to add to the previous point, like it becomes with the best deals, and there's something that I didn't think about so much before I got into VC. For the best deals, it's really not the relationship is inverted, whereby you might imagine it's the founder asking the VC for money, and so all the power of that relationship is with the VC. But when it comes to the best deals, it's really the VC asking the founder to take the money and take their money rather than someone else's. And so that's where it becomes super important to think about what you're offering as a VC, and perhaps why you end up seeing the returns really clustered in the top VC funds, because you're bidding against Sequoia and A16Z, and in Europe, like the other big players like Boulderton and Atomico and Cherry Ventures and stuff like, and Octopus, like. And so if you're and that's why some of these specialists, like you said, do really well, because perhaps if you're a prop tech fund, if you're a prop tech startup, you really want a prop tech fund on your cap table because you want their network. Like, they might have a great network of your potential customers that they can make intros to. So, but yeah, the bottom line is you've got to think like, why is your fund where what your fund is essentially just like them. Like you're competing for their money. You're competing for the spot on the cap table, and you've got to think what's your right to win in that sense. So yeah, and then the next question was like, what does a day look like, right?
Yeah. What does a day look like? And maybe even like talk about the org structure of big
Oh, the org
versus small.
structure, right? Okay, I think it's a work structure. Okay, org structure. Yeah, so there's usually like one or two founders of the fund who came up with the idea and are they're like the credibility behind the fund. So they might have been a partner somewhere else, or they might have been they've usually been have some kind of track record to then raise the fund off, or some kind of special source. Like we have this really famous investor in Europe called Harry Stebbings. And I don't know if he's super well known out here in the US, but so in his fund, he's that guy. And the reason he has like the special source he has is this podcast, which gives him great distribution and great sourcing abilities. And so he's at the top. And then below that, you'll have like, I don't know, depends on the size of the firm. Let's say like, imagine like it's quite a small firm. Imagine you've got like 15 people. So you have like one person at the top. And then you might have like three people maybe who are like partner, and then you might have like, I don't know, you might have like 4 or 5 VPs, and then maybe you'll have like the rest might be associates, or you might have like also you might also have an equivalent number of VPs as you do partners, and then an equivalent number or 1 plus 1 for associates, and then you might have like a few visiting analysts or interns or there tends to be, I guess the important thing to note, I don't know how it is in the US, but in Europe at least, there tends not to be any analysts. We don't really have analyst roles in VC in Europe. We only have associate roles. Like the role I'm doing now, visiting analyst, that's as good as it gets for an analyst role. And it's not, it's a kind of a weird analyst role because it's 6 month contracts. So I'm on two, I would have left, or I would have been leaving in March, but they've extended it. So I'll be here for a year. But it's like, it's this weird situation where you don't have very good job security, and but you're like the entry level role is an associate, so you have to go through this sort of wilderness until you land the jump and get an associate, and then life is good again.
Yeah. So yeah, let's talk about a day in your life, man. So choose a day in your calendar. Maybe it's from last week, maybe it's from, this week. And tell me like 8 a.m. I wake up, 9 a.m. I drink coffee, and then go down.
I tend to wake up like it's not too bad. It's like 7ish. Uh, and then I like to go for a run before work because they have much nicer showers, to be honest, than I have at my house. And so I like to go to the office, go for, and also in London, the tube, some people just deal with it, but if you go on in rush hour, it's kind of a miserable experience. Like some people don't find it very miserable and think it's fine, but I find it kind of miserable. I mean, everyone's packed in, everyone looks depressed. It's not smiles and sunshine, put it that way. And it's also raining a lot in London, right? So there's not any sun, and it's like it's just this post dystopian kind of world. So I like to get in early, miss the craziness on the tube. So it'll be nice and quiet on the tube. Get in early, go for a run, have a shower. Like still have sort of 30 minutes before 9, where you can sort out your emails and stuff. And yeah, there's always lots of emails going on. So there's always like 30 minutes to do that. And then like we'll on Mondays, for example, we might have like a deal flow talk with the whole team for a little bit. And then as the one of the juniors, it's my job to take the notes from those meetings and format them and distribute them out and make sure it's all clear and everyone knows what's going on. Then so you might have a deal you're staffed on, and so then it's do you have a deliverable that you might want to get out like tomorrow morning, and so your first priority might be to make sure that you've done all the analysis and you're ideally getting it out today so that it's on time for tomorrow morning. So you might have a second call scheduled, right, with some founders, and so you might want to be going through the data room they've sent and making sure that you've got lots of good questions to ask, and you're sort of going through the diligence process, and you've identified the things that you like and dislike, and are comfortable going through the data and asking questions regarding those topics and digging deeper on the things you do like and don't like. And so that might take a few hours, and then you might have another like first call with a founder. And so before a first call with the founder, it's always good to make sure you've got sort of 10 questions to ask. You know what they do, and you know what kind of concerns you might have with that, what kind of likes you might have with that. And so then might do a first call with the founder for about an hour, go into the background, explain what the fund's about, hear about them, ask your questions. If it's a good fit, you might ask for the data room there, and then if it's not so certain, you might say we're going to get back to you. And then somewhere in all of that, you'll go for lunch with the team, and then in the evening you might have some like less important presentation stuff to do, like maybe there's LP presentation that you have to fix, do some slides to fix those. Yeah, and that's kind of a decent representation of most days. Like most days you'll have a different mix of those things, and sometimes it might include things that I didn't mention there, like you might have to do a lot of sourcing for a certain market, or something like you have to do a different kind of presentation, or you might have a whole bunch of due diligence to do on a company that's really promising, so you might just be spending all day digging into the data room, or you might be doing an IC presentation. So there's a other bunch of things that I didn't mention that might come up, but that's kind of what a typical day looks like. But it is, I think one thing to mention is it's definitely definitely a not intense, maybe not necessarily intense, but it's not a kind of a 9 to 5 job. Like it definitely, I don't tend to finish until like 7ish. And the only reason I finish at 7 is because I have to go home and make dinner, and then I have to keep working from home for a bit until like 9ish. So like it's better than banking, and I don't think anyone should do banking hours. Like, I just don't think that's like fundamentally sustainable. But it's not like it's the kind of job that you should like what you're doing to be able to do it properly, because it's not super chill basically.
So, like after work hours on London, then you would just technically kind of do the tasks that you could just do solo, right?
Yeah, I mean, to be honest, everyone's going to be in the office until like at least 7 anyway. So you'll until then you'll be able to talk to people and still work on tasks that you have other people that are like collaborative with other people. But yeah, more towards the evening, like 8 or 9, it's more your kind of solo tasks, like things you have to get done for the next few days, or like that kind of stuff, or just before you log off, like answering any emails. Sometimes you go back to those, just those little things you have to do, basically.
Yeah, and there you go. So that's a really, really realistic, version of what you would kind of do in the day in your life if you are in Samuel's position. So, you're looking at all of these deals, you're doing all of these sorts of, could you even talk about like, maybe even if it's from your past roles, could you talk about one or two stories of your most successful investment so far? And how have you met the founders? How did you know that they were the one?
Yeah, so I haven't, as a visiting analyst, I haven't made any investments myself, but I
Like
can,
support it.
yeah, I think from the angel syndicate, I probably had more impact. And from those days, I think the way you really make an impact, any kind of firm, as a junior, your biggest value add is your sourcing abilities and bringing in deals. Because like some of the times the associates they don't have time to go to events and stuff. And so if you can be getting out there to, like, obviously you need to make sure that you're doing the, like, meeting your deliverables and doing a good job anyway. But it's really getting out there and meeting founders, really getting embedded into the networks and really being the eyes on the ground and stuff. And so a lot of the best, especially the Angel Syndicate, a lot of the best founders I met were through being really friendly and getting out there and making lots of connections and always asking people what they're up to and being having good relationships with incubators. Like there's always popping by and seeing how the founders are doing. You really making sure that you're like you're hanging out with lots of founders because you want founders to spread the word that if someone's looking for funding, they can go talk to you, and not necessarily that you're going to magically produce a check from someone, but that you're going to help them in some way. And I think that's also a really lovely thing to be able to do is to be able to be that port of call for founders, even if it doesn't mean money. And so I think that's something that you can do as a junior is really, really get embedded in the best incubators in your ecosystem and just be always looking to help founders because word will then spread throughout their own founder ecosystem that you are like a nice person, first of all, to talk to and will give advice. And then when eventually, as the cool deals start cropping up, it only takes one of them to think of you and let you know about it. And then, there's the chance that you can bring in a really cool deal to your company. And the same goes also with other VCs. Like it's really important to be super friendly and have a really great network. Like I think that basically I think what I'm coming to say is networking is huge. Like and that's why I kind of love the job because if you can just be a nice person and you can go out there and be really nice to people and they like you and stuff, then that's really going to help your role because people are going to share the deal flow with you. They're going to on the VC side, and then on the founder side, people are going to come to you and say, "Look, I'm raising, and actually you helped me out back in the day, so I want to tell you first, or well, I've got a great friend who's considering raising. They haven't started the process yet, but I wanted to let you know about it because I really like you." And so I think a really big part of the job, especially as a when you're more junior and everyone else is too busy to do these things, is doing that kind of thing, like going out there and really. And it's really important to make a name for yourself because your reputation will build up over the years. Like that's part of the reason why Harry Stebbings can get all the cool deals that he does is because he's like the most well-known VC almost in Europe, and so it's super important to do all that kind of stuff.
Yeah, and Harry Steppings, right? He has like so much founders that hops on. So all of those like greatest founders to have ever lived, they hop on and they're like, okay, if I have a cool deal, I'm just gonna tell you. So like you said, it really is about the distribution as well. I know you talked a lot about like events, right? Well, talk about tiny ventures because I am really, really excited to hear about how you started it, who you started it with, and what's the process.
When I was in high school, like I took a year out before going to uni, and in that year I worked for a startup, and they got me to read like all of Paul Graham's essays, and one of them that I always remember is how he's talking about how to find good startup ideas, and he really advises you to look at your own life and look at your own problems and think about it that way because if you've got a problem, the chances are there's 1,000 other people like you that got that problem. And so if you can find a solution to it that's scalable, that's a company in and of itself. And so ever since I read that, I've always been like thinking that way about my own problems. Eventually I came across the problem of breaking into VC as you've documented so well with your podcast is a real problem for people to break in and it's really hard to figure out how to do it. And so then I did this VC fellowship, and I wanted to, after the fellowship, to keep kind of honing my skills. And so I got a few friends together from the fellowship, and I said, guys, we should keep meeting every week and doing like little IC pitches together. And through that, we'll keep like we'll keep sourcing, and we'll keep screening, and we'll keep making IC pitches, and keep ourselves ready for interviews. And then at the same time, when I was working at Atomico, I also helped in the hiring process for the next intern. So I did interviews for the next intern. And I just felt it was a really bad process. It was really hard. When we first of all, when we cast the net out there to find people, it's really not a very big net. We kind of just cast this little fishing net in this tiny part of the sea, and then we just get that kind of fish. And often those kind of fish were people who'd done banking or had done a banking internship. They were just looking for a finance role, right? And I don't think that necessarily makes, I think the best investors are people who have like maybe they've founded a podcast or they want to do VC. Like they're applying to VC because they know what VC is and that's what they want to do. And there's enough people out there like that you can. It's not just like there's 2 or 3 people out there. Like there's a few people out there like that. So it's not like a super niche case. And then so we'd find these people and we'd make them do a first round where we just talk about basic stuff, and then we'd give them a case study, right? And then that seemed super inefficient because we'd give the case study to people, and like the correlation between the school and their performance in the case study was really, it wasn't 0, but it wasn't very strong. It wasn't like zero point 0.8 or something. It was like, I don't know, like 0.3 or something. Like there's a low correlation such that there was one person we had, and their CV was stacked. They were like the man, or it was actually a woman, so they were like the woman. And then we gave them the case study, and it was like awful. It was really bad, and it just made me think like this should be the first step. Like the first step should be you show you can do some good stuff. And so putting those 2 ideas in my head together, I was like, I really would love a competition so that I can show that like I could do the job, and that just because someone else has been to Oxford, I shouldn't be overlooked, right? And so whilst we were doing those IC pitches in that little group together, I thought, oh well, it would be good if, because we also wanted to bring more people into the group to do these IC pitches to help us practice, and we thought, oh, what better way to find people in the group than to do a competition and see who can do it well, and then we can meritocratically find the best person. And then so from that, like, there's this problem with hiring juniors, and then also we wanted to find new people. Once I started doing the competition, I realized, oh, this is actually a great way to find talent anyway for these business analyst roles. And so that's kind of it. Like that's kind of how it came. It kind of came out of the frustration. It's the kind of thing that I wish I had. I wish there was a competition when I was applying to these roles, so that I could really show my skills and jump to the front of the queue by showing that you're really good at it and that kind of thing. And so yeah, and so now we're finishing up our second competition now. We're having our finale in person in London in about 2 weeks, and then we'll be running our third competition in the summer. The only trouble is it's really for people who are based in the UK, and the trouble with that is because we're just not. We're like one of those, you get those like baby companies, and they only ship to the US to begin with, and then eventually they get to ship like internationally and whatever. It's kind of like that. Like we tried our first competition doing it with anyone from anywhere, and it just didn't really work. Like I felt that it just wasn't great for the people who weren't based in the UK, because I couldn't really help them very much. We could give them the work and we could market and stuff, but I couldn't introduce you to a VC that's looking to hire, or we couldn't do an in-person meetup. So it just wasn't it wasn't, it was all right, but it wasn't as useful as it could be. So we just decided just to focus on the UK first. Yeah, and it's really designed to take someone who's passionate about VC and meritocratically find the best person and give them an interview at one of the leading funds. Because there are also a lot of fellowships you can do out there that are paid and are great, but I mean they're really good. They're really good. It's important to get people after the fellowship to the next level. And so, and we wanted to make sure it was free and anyone could do it, and it's not super selective. Like anyone can compete, and then it's up to you to win. It's not like there's some committee choosing who gets the spot, and because they end up just being biased, and so it's that's kind of the way we thought about it, and hopefully it can help people from any background just show that they can do the job and then get it, rather than who's been to JP Morgan and who knows who.
Yeah. And talk a little bit about like, because you co-founded it, right? So what which parts of Tiny Ventures were you doing, and which parts were your co-founders and your team doing? And then
Yeah, so
also talk about like, you know, talk about how you selected the people, as in like just talk about what was the process for the competition. Week one it was this, week two was this, week three was this.
yeah. So as for the team, like in the very beginning, it was just me doing everything until about until like there were people helping out here and there, but like I came up with the competition structure and ran the competition and did the marketing and all that kind of stuff, and all of the marketing and event organization. And then at the end of the competition, I was sort of thinking about the team that were involved and who wants to stay, who doesn't want to stay. And then one of the teams suggested, and actually, who's the co-founder, suggested taking a co-founder role. I think like if it's like that saying, if you want to go, if you want to go fast, go alone, but if you want to go far, go together. And I think you should always have a co-founder. I don't know, it just seems like the right thing to do because it's the burden. I mean, it's only a little competition. It's not much of a burden, but if it is to expand, then you probably want to have someone to share the burden with. Someone actually joined as co-founder for the second competition, and then in terms of what the competition is, so anyone can sign up, anyone at all. The only requirement at the moment is that they're UK based, and it's just to secure. It's just to make sure that we can actually add value and not just waste their time. So anyone joins the start line, and the first round is a one pager. So they've got to go out there, they've got to find a startup, enter details down into one slide, and then submit it. And they have about 2 weeks to do that. Half of the teams then get eliminated. Then the remaining half go on to the second round, which is a 6 page memo, and they have a bit longer, like 3 weeks to do that. They have to. It's basically what's recommended is you take that startup you've done the one pager on, and you dig deeper and write the memo on it. At the end of that round, again, half of the teams get eliminated, and then the teams that remain go on to do a 5 minute, like sort of baby IC pitch, and then they submit that pitch, and we pick the top three teams to present that pitch live to. And we've got four VC judges that are coming this time to the VC judges. And then in the live event, not only is it a really great networking opportunity, it's a really fun event. Everyone gets together and celebrates the next generation of VC, but the idea is that these judges, if they like what you've done, they'll give you an interview, and maybe that leads to ideally that leads to like an internship, right, or some kind of junior role. And so through that process, that hopefully is getting to the best people meritocratically, and that's kind of how the competition works. If that makes sense.
And then how did you guys get the judges? And also, when you guys got the judges, right? Was it that they were already hiring and then you gave interviews? You asked them to give them interviews? Or was it more of just like, hey, like you guys definitely need help somewhere.
Mm.
So hit them up, right? Like these aspiring VCs, they're really amazing. Hit them up.
Yeah, I mean, in terms of getting the judges, it's a super informal process. So three of them I know. I know that like so one of them is someone I work for now, and the other one is someone I used to work for, and so I know that they have this problem. Like so I didn't have to ask them like, oh, are you hiring? I kind of just knew that they would have the problem and might be interested. And then the other two, I don't know why they decided to join. To be honest, I think they're just eager to help out the next generation of talent. And I think we pitched them the idea we pitched them is these are all great people. They've been through 3 rounds over months. I mean, it takes months to do these 3 rounds. They've been over all those. They've put in all that work, and it'd be a real reward for them to present in front of you. So if it's something that you're interested in, just it's all it's going to take is an evening of your time. Just come down, rate the pitches, go home. And so and in exchange you might get to see some great talent. And I guess just said yes. So happy dates.
Yeah. And, people are actually kind of surprised on how much you actually say yes to things, right? Like if
Yeah,
you
I know,
never
right? It's
shoot your
crazy.
shot, it's insane. Like if you just never shoot your shot, you would never get what you want in life. And
Mm,
especially for like, for example, Samuel, right? Like he already got two judges. He already know some people. And he's like, okay, there's already two VCs that wants to do this. Hey, would you like to come on?
yeah,
And
yeah,
especially in industry where it's like, wait, that VC invested in that founder, that VC is going to that event, let me go as well.
yeah,
So
yeah.
it's social proof, but at the same time, it's like if you don't shoot your shot, you'd never get it. So let's talk about for aspiring VCs, right? I know you talked a bit about how to break into VC. For our viewers who needs an actionable plan to implement right away, what would be your recommended 6-month plan to fully break into VC? And say like month 1, 2, 3, 4, 5.
Yeah, I think that's a good question. Some of the things you can do like immediately, which are really good. You can start like making videos on VC and like capturing things that are going on in the ecosystem. And then you can also start going out and meeting founders and packaging up those deals in sort of memo format, like passing on those deals to great VCs. So thinking about those two things that you can do, like at the end of those 6 months, I think the target could be to send like 6 deals on or something like that and produce like, yeah, maybe produce, 5 videos about the venture ecosystem. And so having that as the goal, like in month one, I would say try and go to like 10 events in your local ecosystem. And then alongside that, pick a subject that you'd like to do a deep dive on. And then in month two, make sure that you go to 10 events again. And this time aim to write like one memo or one pager about one of the startups you've met. And then on the content front, aim to make a 30-minute like deep dive video on a sector of your choice. So that's month two. And then month three on the sourcing front, again, 10 events and maybe do two one pages this time. And on the content front, I'd say make another 30-minute, what's it called? Deep dive, as well as maybe like do an interview with the founder, like record an interview with the founder, talk to them about how it went, and like do a little interview or something, and you can post all this on your little YouTube channel. Go for it, make one of those, and then start, and then then we'll go to month three, and we'll stay on the content side. Now, make like an hour-long deep dive maybe, and at first, maybe send it to a VC that you know is interested in the sector because and maybe even share it in like a podcastable format so that they can because VCs they sometimes struggle to have time to do the deep dives. So if you can send across something like that, uh, you're basically trying to prove your value add such that they give you an interview. And so that's something you can do. And then send it to the VC first, and then after like 2 weeks or so, you can post it on your YouTube channel. It's a big old 1 hour deep dive. Make sure it's top quality. So that's why it should take you a month to put it together. And then on the sourcing side, again, 10 events, maybe even if you've met a lot of founders, maybe start considering putting an event on yourself or like hosting a dinner. Like if you've met loads of cool founders, host a dinner for founders. Um, and bring maybe the 10 coolest founders you've met together and help them talk to each other. And then and then also maybe target another memo, like send one more memo that month as well, because you'll be busy with the dinner. And then month four, on the content side, do another 30-minute deep dive, and then maybe like another sort of found a video or something else about the ecosystem. Maybe you want to interview an investor or something, or like host a Q&A or something else like that, where people can ask an investor a question or do like a lunch and learn with an investor. And then on the sourcing side, like 10 events, maybe send 2 memos, and that could be it for the month. Month five on the sourcing side, 10 events again, maybe aim for 3 memos this month. And then on the content, I'd say do another hour-long deep dive. Do the same thing, like send it to one of the investors, and then 2 weeks later publish it, make it public, and then that can be it for the month because that will take quite a long time. And then that brings you to month six, where you should hopefully have produced like a whole bunch of cool videos on deep dive videos. You should have a bunch of startups you can talk about super fluently. You should have built your network in the founder community quite a lot and be in a great position because once you need to show VCs that you can add value to them. And the best way to do that is I think to do the things I mentioned, to be able to provide introductions to great companies and show that you have real expertise on certain sectors. And I think that should really help. Anyone can start doing that today.
Yeah. And there you go, right? Like literally, if you start adding value to those VCs are going to want you. They're going to be like, hey, would you like to help me out a little bit more this summer? Would you like to help me out and in this break or maybe even as part-time? And
Hmm.
this happens because you started giving value instead of just taking from it. Like saying like, hey, can we just have a random meeting on this and that? And I just want to learn about this and that. And in essence, if a VC says like, here's what I need right now, and you gotta ask them this question: what do you need the most right now? And they say, I need this the most right now. Even if you don't have it right now or you're unsure if you have it, just write it down and then follow up. And that is how you prove your value, just like Samuel says. So now for a few rapid fire questions to wrap up, a few words or one sentence. Ready?
Yep, let's do it.
If you could invest in any startup from the past, which one would it be?
That's a good question. Yeah, there was one called that we actually saw during my Angel Syndicate days called IV. So IVEE. It was a really cool startup.
And then what is your favorite place to travel to but haven't yet?
Oh, yeah, it's a good question. I'd love to go to see the pyramids in Egypt. I'd love that. I've never done it, but I'd love to do that.
Oh my gosh. And what is one fun fact about you most people don't know?
Fun fact question. Gosh. Oh God. It's really put me on the spot. Gosh. Fun fact. What can I say? I think fun fact about me is, gosh, I really don't know. I'll just say something simple. I play the guitar like all the time, and yeah, that's something that's people don't know so much.
So what's your favorite song on the guitar?
Yeah, it's a good question. I think I quite like do you know Blackbird by the Beatles?
Oh my
That's
gosh.
quite good. It's quite a good one. It's
Dude,
yeah.
I gotta hear you play sometime because I literally just like started the guitar, I
Really?
think a week ago, and I played it a little bit too much that I broke the E string. So I have to restring it with
Oh
my
my gosh. Yeah, that's annoying. Yeah, I really have to restring it, but when I do, it's like it's an annoying task. But it's a great instrument to play, and it's I don't know if you play anything else, but if that's the first instrument you learn, like it's also a great one to start with as
yeah.
well.
And is there any thoughts that you want to finish or we didn't get to cover on this pod that you'd like to talk about?
I think the only thing I want to leave it with is like if you really want to do VC, if it's really something you'd like to do, you can definitely do it. Like, if you put enough hard work and effort into it, it's not a rocket science job. It's not impossible. You can definitely do it, and just keep cracking at it, and it'll happen.
That was amazing, CMO. For anyone listening who just wants to learn more about you or your firm, what's the best place to reach you?
Yeah, feel free to reach out to me on LinkedIn, and I'm pretty social kind of person. So just reach out if you want a coffee chat, and we can always connect. And happy to answer any questions, and yeah, all that good stuff.
And does your firm have like a VC internship program or hiring for roles right now?
We do, but you have to have the right to work in the UK. So I mean, definitely, give me a text if you're interested. But yeah, you have to like we don't sponsor visas basically, which is a pain. But yeah, so if you have the right to work in the UK, just let me know.
Awesome. So that's for our UK audience right there. And I'll make sure to put the description of his contacts below. Out of everyone you know, who are two amazing VCs that you will recommend as future guests to our podcast?
That's a good question. I think this guy, my old boss at the Angel Syndicate, he'd be interesting to talk to because yeah, I think will have a different perspective. I don't know if you ever talked to anyone at that like stage because it's a bit of a unique role in the ecosystem. So, his name is Josh Shetty. He's an interesting guy. And then, probably my old boss at Atomico, Hannah Steiner. She'll know that report. There's so many insights about Europe, and maybe it's interesting for your US viewers to know like how European tech's doing. And so she'd probably be quite interesting to know to talk to. She has lots of facts to say and share about the European ecosystem.
Yeah, they sound amazing. And thank you again. And thanks to everyone who's listening. Comment a question you want to hear from Samuel or from our next guest. If you enjoyed this episode, make sure to press the subscribe button, like, and share it with someone who's interested in getting the venture. We'll see you next time on Break into VC.